Shahina Mukadam now joins us. Shahina, how would you look at Ashok Leyland? 2 straight months when numbers were not that great. Even Tata Motors MHCV numbers declined this time around. You think it's time to take off money from MHCV?
No, not really. I do agree that this month numbers were disappointing, as were last month numbers for Ashok Leyland, as well as the overall CV has not really shown the traction that one would have liked or one had seen earlier in the last 2 months. But I do think that there is absolute scope for numbers to move up in the CV segment, and I would continue staying on in the stock. And I think both Tata Motors as well as Ashok Leyland look interesting. Tata Motors, of course, not anything to do with the Indian operations, more to do with the JLR operations in US. I think the demand numbers and the numbers that they are reporting out there are pretty good. So I would stick to these two stocks in the four-wheelers as of now. Of course, the two-wheelers have also started looking a bit interesting now.
Shahina, I just wanted to understand that Ashok Leyland this month grew 8%. Tata Motors had a decline of about 10% as far as numbers are concerned. The MHCV sector on an aggregate would be absolutely flat. Isn't that worrying?
Yeah, I mean, it is, as I said, it is pretty disappointing to see that we've really not seen the sort of traction that one was expecting to come up. But I think the overall, the scenario is such that there has to be an improvement going forward, given the fact that roads is given more importance now than railways. You have various factors in terms of GDP numbers going up, rural demand going up, good monsoons. I think all these things are likely to see a good up move coming in future. So yeah, I see this as a sort of dampener, but I would not give up on the overall CV growth going forward.
Right. You were talking about Tata Motors and the JLR sales over there. What's the view?
As I said, Tata Motors, I think it's more to JLR where the numbers are pretty good in US, and I think there, I think the numbers, the demand remains good, and I think valuations, if you look at Tata Motors, are now starting to look a bit attractive. So I would continue with Tata. I would be a buyer in Tata Motors. Ashok Leyland, I've any which ways had a buy call for a long time, and while this month numbers were disappointing, definitely, but I would still hold on to the story with maybe 1 to 2 year forward type of outlook.
Right. As far as some of these microfinance companies are concerned, names like Equitas, probably SKS Microfinance, Ujjivan, do you think that there still a lot of value exists?
See, I would say that they're expensive at current levels. At about now almost 6-time book, I would say that they are expensive. At the same time, the numbers, the growth is coming in. You mentioned Manappuram. I think there the stock has rallied a lot. But if you actually look at the business growth, I think there, since the growth is there, I think these stocks will continue finding investors, but I don't think the valuations are like runaway cheap or anything at this current levels.
Right. Valuations are not cheap, but even their growth outlook is particularly quite strong. So do you think if the growth number, the growth numbers are 40-50% which the street is expecting, say if they deliver like 60-70, which they have delivered in the last 2 years, especially SKS Microfinance, you think that is something which will make these names look cheap?
Yeah, actually that is what is continuing to find, buyers into these stories. For example, like let's say Manappuram that you mentioned, there I think the business, the way they are doing the business is also a bit changed the business model. From long-term gold lending, they are coming to short-term, as well as we see gold prices moving up. I think there the overall business has, in addition to the positive sentiment and rural demand picking up for their type of loans, I think to that extent there, while the stock has moved up 100%, I think there's still scope for it to show better growth numbers in the 1 year going forward. So there I would prefer between SKS Micro and Manappuram, I would still prefer Manappuram despite the fact that the performance, it's really outperformed given the change in business trajectory.
As far as BHEL is concerned, I mean, I have not seen a very major order or something which the company has got or the management commentary which has changed. It's gone from the levels of 110 to 140. You think it's purely short covering and investors should stay away from such names?
Yeah, I do think so. I think it's like, you know, one of the laggards, like even if you see ONGC for that matter, some of these PSU stocks have really sort of are trying to catch up with the rest of the market. They have been total underperformers, and I would stay away from a BHEL. I agree with you that there is a nice bounce that has come in, but and also there is some bit of fundamentals to support that bounce. For example, that we saw after the fourth quarter, they mentioned that, you know, the order book position is, I mean, in terms of there is some improvement, some green shoots, but I would, if I had to be invested in that sector, I would go with an L&T which has got all the positives and, you know, not that much and doesn't have the downside negatives like BHEL. See, BHEL, I think it is it is affected by imports from China, and I don't see that, you know, those problems going away very soon. So I would still avoid BHEL.
Right. You know, as far as BHEL is concerned, I mean, no real reason to cheer, but you will keep getting such moves up and down.
It moves. See, earlier, if you see the band for BHEL, it was between 110 and 130. So, to an extent, maybe the band has now moved up, say, from maybe 120 to 140 or 145 or something like that. But really speaking, I mean, if you're a trader, that's fine. But if you see on the ground, despite, you know, despite everything, you're still seeing losses. I wouldn't really be entering a stock like that. The power sector, demand for orders from the power sector to come up and them to compete against China is really, it's very difficult for them to really get out of this whole mode. So I think better to stick to the private sector, L&T, which not only gives you exposure to the segments that BHEL targets, but also to other sectors which are doing pretty well, like infrastructure, which is expected to do better, and the oil and gas exploration segment. So I think it's better to stick to you know, L&T between the two.
Right. As far as something like a DLF is concerned, where you know, you see a lot of changes happening in terms of debt profile, how they are looking at business going ahead. That's something which is re-rated. Of course, it's doubled from the lows of 80 or 90. But overall, do you think even now it's very cheap if one considers that what is going around in the market actually happens? It could re-rate the stock further?
Yeah, I think DHL, I have been recommending it as a buy for some time now in the last 1 odd month. I think there are a couple of things that have worked positive for it. You know, there are real policy changes. Like if you saw the RADA Act, the Real Estate Act that the government has put in place, I think to an extent it will favor the larger, more established players which have got that experience and exposure as of now. So that is one big positive. The second one is the REITs, the changes that the government has made in terms of and SEBI has made in terms of making REITs more attractive and also allowing certain projects under construction to be part of REITs. So I think all these factors, and as you know, that DLF is one of the pioneers that will possibly target the REITs. And also in the last segment is the debt, which is the major problem for DLF, and where the promoters are making full-on effort to bring down the debt. So to that extent, I think all the things have come in place for the company. We are seeing other also real estate stocks that are moving up, and so I think the sentiment is changing for the overall sector also.
Right. You know, as far as REITs are concerned, do you think that will be a big trigger for something like a DLF? Their cost of funding could come down quite materially?
Yeah, I think that is a big positive because really speaking, they will be able to deleverage their balance sheet and capitalize on some of the retail assets that they have got now, as of now, plus some now that because of the changes, some projects under construction can be part of it. So their fundraising program can be aided by REITs, and I think they are already well prepared, and they are so it would be a good way to bring down their debt, deleverage their balance sheet. So to that extent, I think it's positive, and it will give a kickstart to new projects that can come from their side, which I think there has been a slowdown in the last couple of, if you see, last 2-3 years. So I think all these things put together should be a positive. as well as the overall, the sentiment that has come up for real estate, given the changes that are being brought about, slow and steady changes, but these are very material changes. And while immediate impact, we are seeing that, yeah, there is some softness in overall real estate prices on the ground. But I think after a year or so, when things fall in place and the builders, these companies are able to put their processes in order, I think the established players will really have a head start over the other smaller players. And there I think companies like DLF and some of the other other local companies that we know about, some from the south, I think all these companies will do better.
Shahina, what would you do of the metals pack? Metals pack has done phenomenally well.
Yeah, I think it is a bit of a void as of now. I would take some profits off the table. I think, for example, metals, if we are discussing ferrous, I think they have been benefited by the MIP. And while we all hope it will continue, and there is a case for it to continue, there is a bit of uncertainty. So I think that risk element is high, and plus given the fact that while demand from China is stabilizing, but I don't think there is any pickup, and it's going to be some way away when we really see the prices going up based on pure fundamentals. So I think metals is a bit of a void. If at all, then Hindalco would still be a space one can look at, because there I think aluminium prices are stable and moving up. And I think a company like Hindalco, which has reported good numbers on back of very good volumes, is likely to continue doing better going forward. So in the metals, I think I would sort of remain with the aluminium space.
Right. Aluminium space has also done well. So only if you want the exposure to metals, you would buy into the aluminium space, or otherwise it's a complete avoid?
See, Hindalco, I have had a positive from much lower levels, and I remain positive on it on pure valuation, pure company bottom-top approach type of basis. So but overall metals as a space, I think it's avoidable. Hindalco, only the reason being that they had these huge expansions, and now that is coupled with improvement in realizations. So the two things have come sort of together, and valuations were attractive, and they remain attractive even at current levels. So to that extent, I'm recommending a Hindalco, but otherwise I really would avoid the metal space even as of now, because of it is more it's driven by certain I would say not natural reasons for the price to remain up, and it's not the so it's not really found the correct level of prices. If MIP were to be taken out, then we could see a big correction. So I would avoid. It's like, I think it's a bit too risky for entry at current levels at the current price point.
Right. As far as some of these names are concerned, where debt is a big issue, so something like a HCC, we got statement overnight that they would be looking to be debt free. A lot of other companies which are having huge debt, there are some issues which the promoters are addressing. Would you buy into that name, or you would wait for a cleanup before you would look into these debt companies?
Actually, I didn't get the name that you were talking about. Which
like HCC, Jaiprakash Associate, where promoters are looking to come out, divest their stake, try and address the debt issues. Would you wait for the address of debt issues, or you would make a basket of such companies and you would want to take a little bit of exposure over there?
See, these are very, very high risk bets. Like for example, JP Associates, like maybe a month back, I would have said, yeah, maybe that they are getting out of their debt problems. One can hold and see. But as again we are hearing that there is a problem regarding the sale of their cement. There is some issue that is going on, and which may not materialize. So really speaking, I think these companies are best avoided. They are any which ways come off a lot, and I don't see any reason. Like a lot of them, they are finding different type of promoters, or they are able to sell some assets, but it's a long drawn process, and I think even the net value of the assets that they're trying to sell is many times now lower than the overall debt that they have. So I don't see any point in getting into these companies. I just prefer avoiding very high debt companies which have low profitability and not able to meet their debt, their interest burden.
Right. As far as some of the mid-cap defense companies are concerned, would you like to buy them? Do you think defense is a pack which interests you, with a lot of noise which is being made around the defense pack?
Yeah, in defense, no, I don't like buying the smaller ones, but I would prefer, like, say, I personally hold it also. Tata Power. See, for example, it is getting into defense with joint ventures. Plus, it's got its overall power space that it is in, which is hopefully going to do better a year or two forward, given the fact that they've got new capacity coming up. So, if one has to enter into the defense play, I would select something like a Tata Power. Secondly, another stock which I again also really I am very positive on the defense space, but I won't get into direct defense space because this is a very long drawn process. It takes about 10, 15, 20 years to develop new products which are acceptable. So companies which are already there supplying, like for example another company I hold is Ashok Leyland, which again is I would say an indirect defense play. So with higher orders coming in from defense, with the increased spending, I think these are the companies which are delivering even from other of their areas. So I would prefer such defense plays.
Right. How would you look at Interglobe Aviation or maybe a SpiceJet or Jet Airways? All of these names are buzzing right now.
Yeah, I think these will continue doing well, as we've seen that the yields are better, that oil prices have moved up, and there is a small impact of that, but I think it's still it's much better position than what we've seen in the past. I think they're expanding. I think they are able to get higher volumes by keeping their I mean we are seeing a nice control. I wouldn't say but it is somewhat of a governmental interference in terms of the prices they can charge, but it is driving volumes. So to that extent, I think all things have come together, and all these companies are now well capitalized to an extent. So I think this space is looking much better than it has for many years, and I think this will continue till oil prices remain in this 50-60 type of 40 to 60 type of range. Once we see a big spurt, then I think we will have to review. But as of now, the space looks good, and they're making good money. So these are good spaces, and Spice, I personally also own it. I think it's given us decent returns, and if we see with the change in government policy, if we see FI investment coming in, or if we see some good FDI investment coming in into this space, I think it will keep the stock prices in focus and pretty robust. So I think the space looks attractive even now.
Right. Shahina, thank you so much for taking out time for us. Hope you have a great day ahead.